All right, today we're jumping into a playbook for trading in what feels like total chaos. And this isn't just theory, okay? This is a four-step guide that was forged by one trader's trial by fire in the wild markets of 2026. Let's just be real for a second. This probably sounds familiar, right? If you're in the markets right now, you've almost certainly felt this frustration, this feeling that all the old rules just don't apply anymore. That is the million-dollar question, isn't it? And today, we're not just going to sit here and talk about the problem. We're going to walk through a concrete, actionable solution. But before we can get to the how, we really have to get a grip on the what. What in the world are we actually dealing with here? Let's take a quick look at the environment traders have been up against in the first part of 2026. The start of the year has been an absolute storm of events nobody saw coming. We're talking major geopolitical shifts happening not just every month, but it feels like every single week. And this isn't just background noise. It's a fundamental change in the market's entire personality, and it is cranking up the volatility to an extreme level. So how do you even build a strategy for a market like this? Well, it doesn't come from a textbook. It's forged in the fire of experience. A really painful, but in the end, a really profitable journey of having to adapt or die. I absolutely love this analogy. Think about it. Even the best traders on the planet have losing streaks, especially when the game completely changes on them. The point isn't to have some magic crystal ball. The point is to recognize that the other team's defense has shifted, and you've got to change your game plan. And this timeline really shows that journey in action. Just look at the connection between the market conditions and profitability. Those slower, more predictable markets from 2021 to 2024, that's when the old strategy worked and profits were consistent. But bam, 2026 hits, extreme volatility comes roaring back, and the old way of doing things just breaks down, leading to 2.5 months of losses until a new adapted approach started to click. Okay, so let's dive into the heart of this thing. Out of all that pain and all that adaptation came a super clear four-step plan designed specifically for the chaotic markets we're seeing right now. So here it is, the whole shebang. 4 simple but incredibly powerful rules. Ignore the media, dial back the aggression, stay away from all-time highs, and absolutely perfect your timing. Now, let's break down what each one of these actually looks like in the real world. All right, step 1. This one might sound completely backwards, right? In a market that's being thrown around by huge news events, the advice is to ignore the news? Well, not exactly. It's about ignoring the influence of the media hype on how you make decisions. This example is the perfect illustration. The story from the media was a sure thing. Maduro's abduction happened over the weekend, so oil had to spike on Monday. But what did the market do? Nothing. Crickets. The big price spike actually came weeks later, and it was for completely different reasons. It's such a powerful lesson that what the media is shouting about and what the market actually does are often two very, very different things. Okay, step 2 is all about discipline. It's about psychology. When the market is swinging wildly, your gut, your instinct, is screaming at you to trade more, to try and catch every single one of those big moves. This framework says you need to do the exact opposite. And here's what that looks like in the real world. The trader behind this strategy literally went from taking 3 or 4 trades a week down to just 1. The goal is no longer to catch every move. The goal is to wait patiently for that single best, highest probability setup. In a market like this, your profits come from quality, not quantity. Let's move on to step 3, which our source says is the absolute backbone of this entire strategy. Stay away from assets that are trading at prices they have never, ever been to before. So the whole point here is this distinction. Trading, in this view, is a game of statistics. You're looking at what happened the last 10 times the price got to a certain level to try and predict what might happen on the 11th time. But if an asset is at an all-time high, you have 0 historical data. There are no past reactions you can analyze. And at that point, you're not trading probabilities anymore, you're just guessing, you're gambling. Think about it like this. We have tons of data for getting to the moon, right? We can plan that trip with a really high degree of probability. But it would be insane to use that same map to plan a trip to Mars. It's a completely different territory. Trading at an all-time high is the exact same thing. You're trying to navigate Mars with a moon map. Your data is totally irrelevant. So you've ignored the hype, you've reined in your aggression, and you've stayed away from uncharted territory. Now what? Well, this final step is all about execution. It's about pulling the trigger at the perfect moment. So many people see a massive price move after it's already happened. And then they decide they want to get in. They see Bitcoin hits 100 grand or oil jumps 30%, and that's their signal to buy. But by then, they've already missed the real opportunity. This quote says it all. The profit is inside the volatile move itself, not in chasing it afterwards. An educated trader uses their analysis to anticipate the move and get in as the volatility is actually happening. Because once the move is all over the news, it's over. It's gone. You had to already be there. So, when you put all 4 of these steps together, it becomes about something much bigger than just a set of rules. It's about a fundamental shift in your mindset, from just reacting to the chaos to strategically using it to your advantage. And this slide really sums up that whole journey. You move from being a reactive gambler, chasing news headlines and those new all-time highs, to becoming a disciplined trader. You become someone who waits patiently, who relies on historical data, and who executes only on the absolute best opportunities that the chaos serves up. And that leaves us with one final thought to chew on. When everything feels so uncertain, a lot of people think the safest thing to do is nothing, to just sit on the sidelines. But maybe, just maybe, this framework suggests that the real risk is inaction, the risk of failing to adapt your strategy and missing out on the incredible opportunities that only chaos can create.